into the more intricacies of the specific topic, I wanted to discuss about certain important surrounding developments that have been happening. You see, one thing I'm sure all of you may be familiar with is there has been a substantial increase in the number of TDS transactions which have happened up. Number of coverage in TDS has gone up substantially. It was not so much even 6, 7 years back, but in the last 7 years, almost every transaction is now covered under TDS. So, given this backdrop, we're talking about cash transactions. Why am I talking about TDS over here? The most critical one I must state is we are well aware that after demonetization, there are a lot of restrictions placed on cash transactions, and I would say it has been done rather successfully, and we can see the impact today. If we have been following the news, highest tax collection in the history of India, number of tax filers gone up substantially. So TDS has been a key tool in controlling these cash transactions, or rather detecting the cash transactions. So I jokingly say, you know, recently the AIS and TIS was introduced by the Income Tax Department, the annual information statement and the taxpayer information summary. So these two, in my view, 26AS was such an important factor in controlling this rampant incorrect claims of TDS, high cheating of income tax, claims where Form 16s were forged. These are all real challenges faced by the Income Tax Department. 26AS played a great role in controlling all that. But more than the role of the 26AS, I can personally see the impact that the AIS and TIS is happening. I can tell you one very, very funny story that happened. We had a person who files returns with us for more than 35 years or 40 years now. And this gentleman, he has been paying the same fees for the last, I think, 20 years, refuses to pay more. So I told, okay, this time as a matter of principle, I am going to charge just 100 rupees more, because it's not that 100 rupees is going to make a difference or anything. I just want to charge 100 rupees more for the sake of charging, just to say that I have charged the fee. So I told him, sir, we are increasing the fees. We are going to make it 100 rupees more. Immediately he started, no, 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 Abhishek, how can you increase 100 rupees? It is not fair. I have been filing returns with you for more than 30 years. I said, sir, that's all okay, but 30 years you're saying, no, 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 I am a pensioner. After all, I'm a retired person. I don't get any money. How you can charge this 100 rupees? I've come to your house. I have had food cooked by your grandmother and all. So I said, sir, that all not at all relevant to what we are discussing. No, 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 Abhishek, I cannot. So after 1.5 hours of discussion, finally that 100 rupees also he did not pay. I felt okay, I wasted 1.5 hours. Whether that is worth that 100 rupees also, I don't know. So finally he left the same fee only he paid. So I finally gave up. Okay, no problem. Next year when the same assessee came, the AIS and TIS has been introduced. I'm looking at the TIS and I've seen sale of securities, 65 lakh rupees worth the securities sold by him. 65 lakhs worth the sale of securities. So I asked this person when he came, I said, sir, have you sold shares for 65 lakhs rupees? His answer should have been yes or no. But his answer was, how did you find out? So that's the role of the AISTIS has been disclosing all these people who have been dishonest. I told, sir, how I found out and all, you forget it. Whether you had or not, you tell me. Oh, yes, I had, but so I have never shown so many years like that, he started saying. So that's when, we realized, even though people, they say, oh, you are the auditor, you are the most trusted person and all that, there are so many assessees who deliberately do not disclose many information. Another major information they don't disclose was the savings bank interest. People used to say, oh, I have only one account, sir. Only one account, you put the savings bank. Less than 10,000, sir, it will be. You claim 80 they will advise us. They will not give the bank statement if we ask also. They will say, sir, you put, sir, 80 is there, no, sir, up to 10,000. You put 9,000, sir. It will not be more than that. So they will not give, so we are forced to file it saying 9,000 rupees. Finally, AISTA is coming out. That person has 7 saving banks account. He has interest itself more than 2 lakh rupees. He is saying put less than 10,000, put less than 10,000. And this AIS, TIS, mark my words, my dear friends, It has been a game changer. It has been a game changer. And that is the fundamental reason why we are seeing so many more people file the returns of income, so many more people pay their taxes, because now they are caught. They cannot avoid it because the income tax smartly is collecting the information from other sources. Earlier, the erstwhile how it methodology was is the assessee himself has to be honest. I am Harish Chandra, I will offer everything. Yes, yes, this and all I had. That person had to offer it. It was done under the utmost good faith that the assessee will be an honest person who will disclose all the income. But the reality is a shockingly otherwise thing that even we are shocked by. Even chartered accountants are totally shocked by this. So the role this AISTS played has been a game changer. So why am I talking about AISTS? Another very critical thing which is being collected by the AISTS is the SFT transactions. The statement of financial transactions is now again much like the TDS, that has also been widening. What and all has to be reported, what and all has to be captured. A great role this has played is enforcing the banks to capture the information of heavy cash deposits made by assessees. So now the assessees are duty bound to, rather not the assessees, the banks are duty bound to disclose what are the cash deposits made by their customers beyond a certain point. So people who are making more than 10 lakhs or 50 lakhs, etc., these people have to now, without any prejudice whatsoever, any reason whatsoever, they will be forced to file their return of income and justify, sir, this cash deposit is not an income, or sir, everything is a expense, but they have to prepare the books, or they have to file a return and justify. Otherwise, they will get the notice. What is the basis for this 10 lakh deposit? So huge, once again, game changer of this SFT transactions is reporting of the cash transactions. And also, you know, very many people, when the budget comes, even the most recent budget, many of you may have experienced it even in the income tax side, is that why is that 2.5 lakhs basic exemption not increasing? From last 8 9 years it is 2.5 lakhs, 2.5 lakhs. Why it is not increasing? But the government essentially, they have given the rebate up to 5 lakh rupees. You have a rebate now under the old regime. Under the latest new regime, you have up to 7 lakhs. Plus they also given marginal relief, which means the slab rate effect coming up to 7 lakh rupees under the new regime. So instead of doing that, why don't they simply increase the base limit to either 5 lakhs or 7 lakh? The reason is simple. The logic is simple. We want people to file the return, because if you file the return, you come into the net of the income tax. We will know what transactions you are doing. So there is a very deliberate reason that the 2.5 lakhs is not being increased. It is not to collect tax. The impact of it is not to collect tax, is to find out people who are filing or who are not. Another example I will tell you. There's a very famous sandwich shop in Egmore. It's a roadside stall. It's a roadside stall. Anytime you go there, there'll be one long queue. Minimum 20 30 people will be waiting. All that fellow does, it's on the road. He will make sandwiches, either bread omelette sandwich or vegetable sandwich, cheese sandwich. That's it. A very tiny shop. It's just a potikada, what we call it. That's all. And there'll be 20 30 people always in queue. Perpetuity, you will have 20 30 people in queue. And that's how busy that shop is. Whether this person files the income tax return, whether he files GST returns, whether he is reporting in SFT, whether he has a PAN number, whether he has a GST number, whether he has a bank account at all. Answer to this all will be most likely no. Answer to all of this most likely. Luckily, due to UPI, today people have started opening bank accounts to get that UPI transaction, to get that code, GPay code or Paytm code, whatever they're using. So that has been helpful. But if you take majority of these places, they don't even capture the data anywhere. Nowhere it gets reported. But his billing will be minimum few lakhs. So maybe he'll have expenses, net he'll have 2%, 3% margin. Does not matter. But his billing will be 2 lakhs or 3 lakhs per day. Per day. Technically, he'll be subject to tax audit. That much revenue this person will be earning. But if you see records, nowhere, he'll be as if he's a ghost. You cannot find him anywhere except you put Google Egmore sandwich shop, it will come up. So that's the level of business that so many people are doing across the country. I'm talking about one shop on one street. Think about the entire nation. So this is definitely a huge challenge. So if we increase the basic limit from 2.5 to 5 or to 7, a lot of these people will totally go out of the net. So in order to keep them contained, that is why this 2.5 lakhs is there. And all these cash transactions which people are doing will get covered in one way or the other. Now, as you're aware, any electricity payment in excess of 1 lakh rupees has to be reported. In excess of 2 lakh rupees, a person has to file the return of income. So that sandwich shop, he may not have a bank account, he may not have PAN, he may not file tax audit report, nothing. But he will pay electricity because he has to run that shop, he has to keep the stove on, he has to keep the light on, he has to keep a fridge to keep the milk, eggs, etc. So therefore, whether he is paying all the other conditions, electricity bill will be paying. That is unavoidable by him. So the moment he is running a shop from 8 a.m. in the morning till 9 p.m. at night or 10 p.m. at night, 100% his electricity bill will cross this 2 lakh limit and he will be forced by that to file the return. How? It's only a matter of time before the TNEB or other authorities start reporting in SFT saying these are all my customers, these are all the electricity bills they are paying. And through that, the income tax can catch these people and nab them, the people who are earning money but not filing returns, not reporting properly. So it is just a matter of time. I think in another 2 years, we are going to see this happen. So cash transactions, there has been enough checks and balances now slowly being introduced to capture them. SFT has been another check, much like AIS and TIS. So, as I told you, demonetization came out in 2016, a big role in curbing the cash transactions. There's been a rather, whatever your opinion of demonetization success failure may be, the most important takeaway is it has created a huge awareness in the entire country about cash transactions. Alternatives have also come up. No way could you have imagined so many people who are using UPI, net banking, etc. today to have done it if demonetization did not happen. So it has been a key driver in ensuring that people are compliant or they are at least cash conscious. They're at least cash conscious. So before I dive into 269 SST and ST, I wanted to touch upon few other cash related transactions as well, because we can appreciate the distinction between the two. The first one I want to talk about is cash expenses incurred being disallowed in what we call section 40A3. Now, section 40A3 says one thing: where any expenses have been paid by cash exceeding rupees 10,000 to a single person in a single day cannot be claimed as an expense for the business. So you'll have to disallow it. But here I have a question, and maybe I'd like to see some answers in the chat box if you can reply. How many of you think in this scenario that I put on the scene, will 40A3 be attractive? One lady goes to the vegetable shop or grocery shop. She buys vegetables and groceries, imaginary, for 35,000 rupees. She's buying vegetables for 35,000 rupees. Is 40A3 attracted in such a scenario? Yes or no? Is 40A3 attracted in this scenario? Yes or no? No. Some people have replied saying no, no, no. One or two, yes, it is attracted. Majority, no. Any other answers in the chat box? Not attracted, sir. So, as rightly pointed out by many, it is not attracted in this case. Let me explain why. Now, 40A3 is a provision which is applicable for people who are engaged in business, So profits and gains from business profession. It is only if I incur cash expenses beyond rupees 10,000 for the purpose of my business does it become applicable at all. If I'm an assessee who is not engaged in business, I am just a housewife or house husband, and I'm going and buying vegetables or groceries for the house, then in that case, whether it crosses 10,000 or whether it is less than 10,000 is immaterial, because 40A3 is not applicable. I am not even claiming it as an expense. So this is applicable where a person claims that amount as a expense. So unless a expenditure is claimed, 40A3 is simply not applicable. So you cannot make any disallowance under 40A3 in such a scenario. Of course, there are certain exceptions to this rule. Payments made on bank holiday, which has now been removed. Payments made to RBI, Co-op Bank, LIC, payment made for purchase of agricultural fish products, animal husbandry, or anyone who is engaged in agricultural activities. The next associated cash related transaction which attracts a disallowance is depreciation, where any assessee purchases any machinery or a capital asset with cash in excess of rupees 10,000 rupees, then the depreciation on the same machinery cannot be claimed. Cannot be claimed. So you cannot claim depreciation. If I want, I can buy it. Oh, you want to buy a car for more than 10,000, sir, in cash? You buy, sir. But please don't come and claim depreciation on it because you have violated section 43 provision. So depreciation benefit is automatically lost in such a scenario. That brings me to the very important point where what if I purchase a car partly in cash and partly through banking channels? So let us assume I'm buying a vehicle or a car, whichever. I'm buying it for, let's say, 1 lakh rupees. I have paid 70,000 through check, 30,000 by cash. Can I claim depreciation on the entire 1 lakh? Can I not claim depreciation at all? Or should I proportionately allow to the person I purchased in banking channels 70% through banking channels? So that alone, you please allow depreciation. 30%, that is 30,000 rupees you have purchased using cash transactions, that is in excess of the specified limit of 10,000. So you cannot claim it. So what is applicable here? So there have been n number of decisions over here which have been very clearly stated. Only to the extent of cash transaction, which is violation of the provision, to that extent only you can disallow the depreciation. Whatever I've paid through banking channels, that I am still eligible for depreciation. I cannot be denied depreciation of the same. So I am still eligible for it. Section 43 does not allow depreciation disallowance where I have done through the banking channels. So to that extent, I can still claim depreciation of the same. Similarly, another associated outflow, which is in cash basis, attracts certain violations under income tax department, is mediclaim cash payments. So cash payments made for the purpose of purchase of mediclaim. Now, Section 80D has been interestingly growing in size over the last, maybe 10-12 years. Initially, always when mediclaim arose, people used to think of the 25,000 medical insurance I am taking. That has always been, you have to do it through banking channels. You cannot pay it in cash. What if I pay it in cash? You still get the medical insurance, but you cannot claim 80D benefit on it. So you cannot claim 80D benefit on it. But whatever benefits of medical insurance, you can still enjoy. That company will still take the insurance. That's not a problem. But income tax 80D benefit not available. Now, this 80D provision has been widening. Now, we all are aware if you're under the age of 60, medical expenditure allowed, which is not covered by your insurance, is a maximum of 5,000 rupees. So, 25,000 as insurance plus 5,000 I can claim as my expenditure. As my expenditure, I'm allowed to claim it. What if I am a senior citizen or I have senior citizen parents? I have two parents who are senior citizens and they both don't have medical insurance. My insurance also does not cover them. So for them, I'm incurring expenditure regularly. I am buying medicine, I'm taking them to the doctor, they are getting scans, treatment, etc. My medical expenditure incurred on the health of a senior citizen parent, does that also have to be through banking channels? Up to 50,000 I can claim. I can either take insurance on them, or if insurance does not cover the medical coverage or medical expenses, then I can incur expenditure and claim that also under 80D up to 50,000 for both my parents, for both put together. So 25,000 plus 5,000 for me, plus 50,000 for my senior citizen parents. Can I incur it in cash for that and claim it? I can definitely incur in cash, but can I claim cash expenses under 80D for the purposes of my mediclaim? Yes or no? Absolutely, absolutely. The answer is a overwhelming yes. I can definitely claim under 80D in such a scenario. You cannot deny me my 80D benefit because 80D only says if I'm taking insurance, only if I'm taking insurance, I need to claim through banking channels. But medical expenditure, I can still incur up to 50,000 in cash also. Additionally, again, many people are not aware of this provision. If I am a senior citizen assessee and I have a senior citizen parent, then I can incur 50,000 for me plus 50,000 for them up to 1 lakh rupees. So up to 1 lakh rupees I can claim under ATD also. And the entire expenditure in this can be in cash also. It is perfectly permitted. Up to 1 lakh rupees I am claiming as expenditure. It is perfectly allowable under ATD. There is no restriction. I can still do it for medical expenditure. But the moment insurance comes in, whether I am a senior citizen or not senior citizen, I will 100% have to claim through banking channels if I want to claim ATD benefit. If I want to claim ATD benefit. Now, here is where the interesting concept comes in and where advisory role becomes certainly more attractive in some sense. Under the new regime, under the new tax regime, ATD is not available. So therefore, any person who is claiming medical expenditure under cash or non-cash does not matter. Similarly, if he's taking insurance also through cash under ATD, does not matter because ATD itself not there under the new regime. New regime makes life easier for assessees by removing many of the exemptions, many of the deductions. It makes life easier for department also because we also don't have to verify from the department side. So therefore, any ATD claims for insurance does not matter if you're the new regime, whether it's paid by cash or banking channels. It is immaterial. It is immaterial because anyway ATD is not there for you. So that is a key point to note when it comes to this ATD. Now, let us come to the highlight of the session, which is acceptance or repayment of loan or deposit by cash, what we call 269 SS. Now, 269 SS was introduced a long time back, playing a key role in dissuading people from cash transactions. Was it a success? In my view, it was a limited success at the time. At the time, it was a limited success because there were not enough tools to track these cash transactions, not enough, methodologies like SFT, ASTAs that we have today. Back when 269 SS and 269T were originally introduced, there were not enough tools to track it and make people accountable. What used to happen generally? People used to take up the case for scrutiny or assessment. In the course of scrutiny assessment, you will see cash transactions. That time it will come to light. Oh, he has done a loan has been given, or he has repaid a loan more than 20,000, more than 30,000. That is when the case used to get picked up. But today, all the details are getting reported by other authorities. TDS is getting captured. So various ways are there to capture this, and it has become a more effective tool today. In fact, when 269 SS and 269T were originally introduced, the government initially envisaged that they should anyone who does cash transactions under 269 SS or T in excess of 20,000 will be prosecuted. Initially, prosecution was the suggestion that let us initiate prosecution action. So imagine you're a person who takes a loan or gives a loan in excess of 20,000, then suddenly income tax can come and refer you for a prosecution and you will be arrested for engaging in this cash transaction. So there is a huge hue and cry. Oh, how can it be done? How can it be done? So obviously, the prosecution idea was dropped. The prosecution idea was dropped, and penalty was introduced. So now, anyone under 269 SS, under 269 SS, any person who accepts certain loans, deposits, or a specified sum other than by account pay checks or electronic mode. Basically, they are saying it is by cash, but the word uses other than account pay check or electronic mode. Then, if this amount is in excess of 20,000 rupees, then 269 SS is attracted. Now, here there are two critical points we have to definitely discuss. What are these two critical points? The first point being where any amount you can see the three bullet points over here. Let me just take out my pen so it will be easier to highlight it for me. You can see there are three bullet points over here. Now, the first and the third one are very easy. Any amount or loan or deposit or specified sum, aggregate of which is beyond 20,000, then 269 is attracted. Third one is either A or B together. What is B? Now, B is a very interesting one. And this is where the role of the chartered accountant becomes very important in the tax audit. where on the date of taking or accepting such loan or deposit, where on the date of taking such loan or deposit, any loan which is remaining unpaid, whether or not it has fallen due, the amount or aggregate amount. That is, let us take a scenario. I am receiving a repayment of 5,000 rupees. It is not in excess of 20,000. 269 SS is 20,000, but I am receiving only 5,000 rupees. So 5,000 rupees I have received, and this 5,000 rupees is 269 SS attracted. Prima facie, the answer is clearly no. Everyone is replying in the chat box saying no, no, no. You're all absolutely right. The prima facie answer is no. But there should be a follow-up question which is asked over here. What is that follow-up question? They are saying you need to ask the question. Not only you should ask how much you have repaid in cash, you should also ask how much balance of the loan is payable. Suppose I have a loan payable still or loan receivable in my case in 269 SS. I have a loan receivable of 2 lakh rupees. Is 2 lakhs in excess of 20,000? Yes. So where the remaining balance of the loan on the date of such acceptance of loan or deposit or specified sum, if there is still a remaining sum in excess of 20,000, then also 269 SS is attracted. So you can see 269 SS 269T is attracted even based on the loan balance. Now, penalty maybe you can avoid under 271D or 271E, whatever. But the critical point here to note is it has to be captured in the tax audit report. The tax audit report, the Form 3CD reported by the chartered accountant, there is a specific question which is asked saying, oh, 269 SS 269T, what you should say in 269 SS 269T? It will ask name of the person, PAN number, address of the person, and whoever is transacting with you for the 269 SS. And then they will ask what is the amount of the transaction. Then there'll be one line, what is the balance in the books on the date of such transaction, what is the date of this transaction, whether received in cash, account, pay, check, etc., etc. Many people, even chartered accountants, have called and asked me this doubt, Abhishek, why they are asking whether cash, account, pay, check in this. If it comes to 69 assets itself, naturally it means it is not account, pay, check or not electronic mode. No, why they are giving a drop down box and asking me to select over here? The reason is simple. If I'm receiving it by way of cash and the balance of thing is more than 20,000, so even if I get a cash of 1 rupee or 2 rupees, if the balance is in excess of 20,000, the remaining balance is in excess of 20,000, I have to report it on that date, and I have to report that my collection has been made either in account, pay, check or cash, etc. Is a very critical point that many people tend to miss, because 269 SS does not necessarily talk about that particular transaction alone. It also talks about what is the balance which is remaining unpaid on that date, and if that balance is in excess of 20,000, then I must check if the repayment has been made in cash or on account pay check, or whether it's a bearer check, etc. So these are all critical points. There are certain exceptions. Any exceptions, any payments made to government, any banking company or post office. I am going to the bank, I am depositing my amount, or I am taking a loan, or I am repaying the loan to my bank. 269 SST will not be applicable in this case. Any corporation established by central or state government, any government company, any other institution which is notified by the central government, maybe in the future, I think as of now, NBFCs is not yet notified. Maybe NBFCs will likely be notified shortly. So if that's the case, then NBFC notified class of institution, it will be covered. Any loan paid by agriculturist to an agriculturist. Now this is a very, very important tool. The reason is I have deliberately not completed reading the sentence. Very commonly I have seen in cases that I have handled that people, whenever this 269 SS or T question comes up, every assessee suddenly will say that, sir, today I am a agriculturist, sir. I have dealt with agriculture. Everyone who has 269, everyone will say, sir, I am agriculture. Suddenly, everyone becomes agriculturist when they get noticed under 269SS or 269T. So here, the critical point to note is, yes, you may be agriculturist. Yes, the other party also may be agriculturist, but you both should not have any taxable income. So both of you should not have any taxable income. So does that mean up to 7 lakhs if I don't have income, it's okay? Now I saw Mohan Kumar sir has raised a question there. I am asking a return question. Suppose I have got income up to 7 lakh rupees, then I don't have any taxable income. Is this correct? Yes or no? Yes, it is correct, sir. It is correct, sir. No, sir, it is not correct. No, it is not correct. No, you've got a few no's also. And no is the absolutely correct answer. The reason being, the simple reason being that 7 lakh rupees is the rebate amount. It is not your taxable income. Your taxable income is still 2.5 lakhs if you're under the age of 60, 5 lakhs if you're above 80, or 3 lakhs if you're over 60 but less than 80. So if your income is more than 2.5 lakhs, even though I have rebate, if I have 1 rupee more than 2.5 lakhs, I have taxable income. So therefore, it should be paid by agriculturists, paid to agriculturists, and both of you should not have any taxable income. Both of you should not have any taxable income. That means both of your income should be less than 2.5 lakhs, should be less than 2.5 lakhs. So this is a very, very critical point that many people tend to miss. So it's a very, very important. So everyone will come and say, sir, I'm a farmer, I'm a farmer. Anytime some big case comes under 271D, 271E, etc., everyone will say, sir, I'm a farmer, I'm a farmer. You are not a farmer. Even if you're a farmer, you will not come under the exception if you don't satisfy this requirement. The last one is the only thing people tend to miss it. 273B states that any failure to the above provisions, if there is proof that there was reasonable cause for the failure, then under section 273B, the penalty will be condoned. You will not have to pay the penalty. Now, sir asked one question I got saying, cannot understand the rationale behind penalty when outstanding is more than 20K. While the client may choose to repay the balance above 20K in fully electronic mode. Yes, you are absolutely right. There is no rationale. But the reason why they are replying this is to capture you to report the information, is to capture people to report the information. Let me give an example. Let me give an example. And I seek the answer in the chat box from people here. Now, there is an assessee and he, okay, this I will, let me first take up this examples that I put over here. There is a assessee and he has purchased a real estate transaction. Mr. X received a sum of rupees 60 lakhs for a sale of property in cash. Will this be covered by 269 SS? I have received a sum of rupees 60 lakhs for sale of property in cash. I have reported everything. It is not unexplained, nothing. I have reported it. I have offered it to tax. I have got all the records. My sale deed also says I have got rupees 60 lakhs. Is 269 yes attracted in such a scenario? Many people have said, no, it is not a loan. No, it is not a loan. No, it is not a loan. Sir, yes, it will be attracted. 3-4 answers have come saying yes. Majority of the answers saying no, no, no. Yes, no, yes, no. Like that only I'm getting the answers. So here, let me reread 269 yeses. Let me reread 269 yeses, the provision itself. No person, company, person, individual, HUF, proprietor, firm, whatever it is, everyone covered. No person shall take or accept from any other person any loan or any deposit. What does 269 SS say? Accepting any certain loans, deposits, or any specified sum. So this specified sum was deliberately introduced subsequently. The original wording only said any loan or any deposit. Subsequently, I think in 2016 or 2015, any specified sum, this wording was subsequently introduced. And what does the specified sum say? Specified sum definition means any sum of money receivable, whether as advance or otherwise, in relation of transfer of immovable property, whether or not the transfer takes place. Now, there is a case called Padmanabha Mangalore Chowta and many other cases also where the income tax or the various appellate authorities, different authorities, have held that real estate transactions also covered under the ambit because of the definition of specified sum. But here I have a contention because majority of the department people always have the view that specified sum means it is any sum of money that I have received. But look at the definition of specified sum over here. Any sum of money receivable. It does not say received. Specified sum means any sum of money receivable, whether as advance or otherwise, in relation to transfer of immovable property. So it specifically says receivable and not received. My view, obviously, being on the other side of the table, tends to be more favorable to the assessee. I am of the view that this provision is not applicable for absolute sale, but where any advance is received or any agreement for sale is entered into, then in those cases 269 SS is applicable because there is a portion of the contract which is yet to be performed. So therefore any sum of money receivable is satisfied in such a circumstance, and therefore specified sum would be only in the nature of what the heading of the transaction says. 269 SS heading itself says loans or deposits. If it is an absolute sale, I am of the view that it is not either a loan or advance or a deposit or whatever name you may call it. The confusion arises. The confusion arises that any specified sum, the specified sum definition talks about real estate transactions. But if you go delve into the details, devil is always in the details. When you go into the details over here, what you will find is that specified sum says receivable and not received. It does not say received, even though it says whether as advance or otherwise. The original wording is any money receivable and not received. So therefore, an absolute sale of property, if it is made in cash in 269 SS, my view is that it should not be covered. Of course, there are certain appellate authorities with differing views. I deliberately put this case to show how they have gone into detail. They have gone into detail to say that real estate transactions will also be covered. So even a received, any amount received. So in our example, we talked about a person who received a sum. There is no agreement to sale, there is no advance, there's no liability, etc. He is coming one day, he is coming, he says, I want to buy the property. Other fellow says, yes, enter into a sale deed, then and there, give the cash, close. So in such a case, is 269 SS attracted for the person receiving the cash? In my view, no, because there is no nature of loan or advance or deposit of any name called. It's a end-to-end transaction which is closed. This confusion no longer arises. It no longer arises thanks to 269 ST. 269 ST today has, came out in 2017, and there they very clearly stated that 269 ST is going to cover all transactions of any kind, So it does not matter whether I have to see specified some real estate received, receivable. That aspect does not matter, because whether it is covered under SS or not, it is going to be covered under 269 ST. So that person, whoever is the recipient of it, will not have to worry about these provisions because 269 ST anyway will be applicable on him. But prior to the introduction of 269 ST, this was a big bone of contention, still continues to be a bone of contention, because there is still no universal decision on this. Department in general take a stand that, oh, it's a real estate means most likely 269 SS applicable. Some people who maybe peruse through the specific reason, they go through the bare act, they see the specific provision, they take a stand that it talks only about receivable. The entire provision, if you read 269 SS itself, the entire thing only talks about loan, advance, etc. It is not talking about a transaction. It is talking about a loan or advance. It's not talking about a received. So therefore, in such a scenario where loan or deposit or advance, etc., is not there, there is no question. There is no question of it being a 269 SS covered transaction because there is no advance or liability involved in such a scenario. Let's take another example. Sum received from husband in cash in excess of rupees 20,000 used for the purchase of property. Is 269 SS applicable? Can I get answers in the chat box, please? Wife takes from husband 30,000 rupees in cash. She takes 30,000 in cash. Is 269 covering this provision? Yes or no? Yes, as it is a covered transaction. There is no exception to it. Any other answers? Sir, no, it will not be covered under this. Yes, yes, it is covered. Yes, it is covered because 269 SS does not have this as an exception. No, because the answer is visible. So I cannot help it if you read the answer, but you try to answer it without reading the answer. It will be more interesting for all of us. So many people saying yes, it is covered. Yes, it is covered. Many people saying no. So before we, since the answer anyway is visible, before we read through the answer, let us once again revisit the provision. Does anywhere in the provision, does it say relatives not covered anywhere? It says no person shall take from any other person. It does not say excluding relatives. What about in the exceptions? Let us go through the exceptions. What does the exception say? Exception also says government, banking company, corporation established by central or state government company, any other institution or association notified by central government, agriculturist to agriculturist, any reasonable cost. Nowhere, nowhere in the original section or in the exceptions to the rule is wife, son, daughter, relative stated anywhere. It is not there anywhere. But as you can see in the slide that I had earlier put, on the right hand side, the answer is there. ITAT in Jaipur and many other ITATs and many other high courts have universally held that where a husband is giving a wife or where the amount is advanced to a relative, then in such a scenario, 269 SS is not applicable because there is no interest element involved. It is not a commercial transaction. So therefore, there is no need, there is no desire for the person giving the money to be interested in getting it back with the interest, etc. He has done it because it's a wife, etc. So where amount is given to a relative, where it is given to a relative, this 269 SS, 269T will not be applicable. Whether this is correct, this is not as per the Bare Act provisions. If you see the law does not carve out any exceptions. The law does not make any exceptions to husband, wife, family, son, etc. It is purely meant for persons who are transacting in this. It's a violation, but this is a judge made law. The judge made law has gone into few aspects which is not there in the Bare Act, much like our old 148 provisions. Where in the act you all know the original provision. If I got a reopening notice under section 148, this is before the modified provision, before the new 148A is introduced. Under the old 148, if I received a notice under 148, first I must file a return in response to the notice. After filing the return, I may seek the reasons for reopening. Once I get the reasons for reopening, I can raise my objections to the reasons for reopening. The assessing officer is duty bound to dispose of each and every objection. After he disposes of the objections, only then he can start the reassessment proceedings. Can anyone tell me where in the act this is there? We are all these provisions that I just told you, or rather the steps I told you. Every single person here, in more than 150 people watching, every single person here knows that these steps are involved in a old reopening. Which provision in the act it was stated? Which section? Is it there in any section? Is it there in any rule? It is not there anywhere. It is not there anywhere because it is a judge made law. It is a judge made law. Why in GK and drive shaft the Supreme Court laid down the procedure? They laid down the procedure to be followed in how it needs to be disposed of in each and every single case. So therefore, it is not there in the act, but it's a judge-made law, similar to the GKN drive shaft. Even though it is not a Supreme Court decision, majority of the courts across the country and majority of the tribunals across the country have universally taken a stance. They have universally taken a stance that these sort of provisions, 269 SS, 269T, will not be applicable between relatives. Between relatives, you see 269 SS, 269T, and 269ST. How I see the provisions, it is like a giant umbrella. Anything that is under the Income Tax Act is below the umbrella. It is below the umbrella. So it will be covered by everything which is under the umbrella gets covered. But 269 SS, 269T is the umbrella itself. That means whether I am violating the act, whether it is explained or unexplained, whether it is between a relative, whether it is in the nature of gift, whether it is between best friends, family, father, mother, son, wife, etc. 269 SS, 269T, 269ST is applicable in all cases. The law does not carve out any exceptions to these people. It carves out an exception to certain parties we just saw, government, company, bank, etc. It does not carve out for any particular individual, whether relation or not. So these are the blanket provisions applicable to all. We'll take a scenario. Father comes to you and says, "It's your birthday, my dear son. Happy birthday. Here's a gift." Is it taxable? Payment between relatives, gift between father, son, they are relatives. Someone put the section 56(2). So therefore, they are covered by this relatives definition. So therefore, it is not applicable. It is exempt from tax. It is no question of taxation. Capital transactions, whatever you want to call it. So it is not taxable at all. But is 269 SS and 269 ST applicable? 100%. Even if 269 SS, you say it is not in the nature of a loan, but 269 ST, if I'm getting a gift in excess of 2 lakh rupees, I am 100% covered by it because there is no exception. There may not be a case of addition. There's a very famous case where somebody challenged the 271D penalty levied under 269 SS. He said, how can they levy penalty? There's no assessment at all. Under assessment, they have accepted everything I have done. So no additions made in the assessment order. See the copy of the order. He has looked at everything. He has accepted. I have proved everything. So therefore, when there's no addition in the assessment, how can you levy penalty on me? You can absolutely levy penalty because 271D, 271E, 271DA, these are not connected to the assessment. They are the umbrella itself. It is not what is under the umbrella. It is the umbrella itself. It is what is above the umbrella or what is the umbrella itself. So if anybody gets covered by that, it does not matter whether you're taxable, not taxable, exempt, non-exempt, explained, unexplained, nothing. The moment you are the umbrella, you get covered by it. So similarly, any gift, any receipt, or even a wedding, there's a case law which I have, which I'll be covering shortly. In a case of a wedding, all the gifts received by you, will it be taxable? It is not taxable, very clear. On the occasion of wedding, gifts received is not taxable. Section 56 is very clear on this aspect. It will not be taxable. But sir, how do I know if I'm getting more than 2 lakhs or not? What if I have a very big wedding? Ambani, Adani, their weddings they are having. They are calling more than 10,000, 12,000 guests, 1 lakh guests. All the guests who come are interiorists, industrialists, and who's who. So they will all give envelope. They will put the money. They will give it, and they will go off. So this envelope, what will you do? Whenever the gift comes, will you on the stage in your reception open it and see, sir, how much this is? Please track it. Oh, it is more than 2 lakhs. Sorry, sir. You take it back. I cannot accept more than 2 lakhs. It's a violation of 269 ST. It's not practical, no? You will not likely do that. So therefore, on the occasion of a wedding, is 269 ST attracted? You will all say gift is not attracted. So our income from other sources, it is not taxable. Gift received on occasion of wedding, whether it's relative or third party, does not matter. But what about 269 ST? 269 ST is still applicable. It is still applicable. However impractical it may be, it may still be considered as an applicable provision under 269 ST. So Ambani comes for my wedding. He gives an envelope in cash. More than 2 lakhs is there. Is it 269 ST covered? Yes, 269 ST is very much covered in such a scenario. So this is where the lacuna arises because certain impracticalities are there. And that is why you have the provision of 273B, or you have under 279, 269 ST, it is inbuilt in that provision itself. If you see 273B, 269 ST is not covered. The reason it is not covered is because under 269 ST, that provision itself, they have very clearly said any reasonable cause is there, any sufficient reason, we will not levy it. So sufficient reason in the wedding, I will not open and see, sir, that is the sufficient reason. So 269 ST, okay, not taxable. It will be exempted and it will not be brought to tax. So you can see over here, gift by husband to wife in excess of 20,000 for even though it is used for purchase of property, 269 is not attracted. Now let us take this scenario. Assessee company obtained cash in excess of 20,000 as a loan from a financier and deposited the same in the bank account of the company. It was held by the, so it went all the way to Supreme Court. This is a Vasan healthcare case. It's a Chennai SSC. Held that merely because the director took a cash loan from a financier and deposited into current account on the very same day, and he utilized to pay salaries. Sir, I had to pay rent, I had to pay salary. These are all had no option, sir. I had to pay it. So it was said that it's a reasonable, sufficient cost. It was held that you cannot be held to be mitigating factor to escape the rigor of the penalty. So even though it's a just cause, yes, noble cause, I have to pay my employees, I have taken a loan in the name of the director and I have deposited, yes, it is still not considered to be a just and reasonable cause. Having said that, even though Supreme Court said this, just recently, very recent case in the 2023, the Chennai Tribunal in Tamira Green Farm, they held company has taken loan from director in cash. It was observed that the entire loan amount has been utilized for acquisition of a capital asset. The transaction between assessee and director company was in the nature of a current account transaction, which did not come under the purview of loan and deposit. I don't know how this conclusion has come by the Chennai Tribunal, because in my view, I kept rereading it when I was preparing for the presentation. I kept reading, what is this current account transaction? Very curious choice of wording which is used, saying it is in the nature of a current account transaction. Where it is in 269 SS, 269T, where in the provision it says current account transaction. I don't think anywhere in the Income Tax Act there's any distinction between current account transaction, non-current account. I don't even see how this question came up and what they mean by a current account transaction. Because in one angle, they are saying it's a current account transaction. In the other angle, they are saying it is for purchase of capital asset, which seems to be a capital transaction and not a current account transaction. So bank account nature, how does it matter whether savings account, current account? It's a company means naturally it will be current account only. There's no option at all. There's no question of saving bank account. So whatever purpose I use it for, it will always be a current account. So I did not really understand the rationale behind this provision, especially given that there was a Supreme Court decision in 2021. But being a Chennai SSC, people who want to benefit through this, they can very much use this provision, because the Chennai Tribunal in Tamira Green Farm very clearly stated, very recent decision, saying it is a current account transaction between director and the company. So if it is received in cash by a director, then also 269 SS not attracted. So it will be escaping the penalty. So it has been held that it's a not penable, not penable transaction. You cannot levy a penal value on it. Second case, a third case, even when no addition is made in the assessment order, penalty can be levied. We discussed this. This is the name of the decision, Gangadhar Murthy, where no assessment, no addition made in assessment. Is penalty still attracted? Yes, penalty still attracted. Now, is receipt of deposits and loans through journal entries covered under section 269 SS? The answer is yes. There may be a situation where, very commonly I've seen this happen, in many businesses, where a person, he gives a loan to the company, maybe through banking channels, he gives a loan. Subsequently, what happens? Company pays for his travel. Says that, oh sir, you're traveling. We will pay for your travel, sir. You're paying personal travel. It's okay. Company pays. He said, yeah, thank you for paying. You please adjust it against my loan. Is this adjustment against a loan something that needs to be reported under 269SS? Yes, absolutely. Because let us once again revisit the provision. No person shall accept any sum of money, loan or deposit or any specified sum otherwise than by account pay check or account pay bank draft or electronic clearing system through a bank account or such electronic mode. If you see the wordings, it does not say cash anywhere. The word cash is not used anywhere, which means cash is also covered. Journal also is covered, because how is journal covered? It is not account pay check, it is not account pay bank draft, it is not a electronic clearing system, it is not through bank account, it is not through any other electronic mode. So therefore, even though it's a genuine transaction, even though every reason is very valid that I have incurred this transaction for a purpose of personal, yes, I have given the loan through banking channels only. Yes, whatever travel I went to abroad, my personal travel, company has paid. They have adjusted against the loan. Seems like a very, very normal transaction, genuine bona fide transaction. No hiding, nothing unfair, nothing illegal about it. But 269 is attracted, because whether or not you are receiving it in cash or otherwise, if it is not in the specified modes, exhaustively specified, 269 exhaustively specifies what modes the transaction has to be received in. Here it is clearly not specified journal entry. That means adjustment in such a nature will also be covered. So even journal entries are covered by 269SS and 269T. Next, loan taken by partner, will it be covered by 269SS? He takes a loan through cash from the company, or he gives a cash in loan to the company. Is it covered? It has been held in this Mumbai decision and multiple other decisions also, where as far as partnership firm is concerned, the first example we took was company and director, which was an healthcare case. In this case, they have said between a partnership and a firm, they are not separate entities, they are intertwined. So even though pan a partnership firm has separate pan, all that, etc., it's considered that they are intertwined, they are one and the same. So therefore you cannot treat them as different entities. So where a loan is taken by a partner or given by a partner to the firm, in such a case 269SS, 269T will not be attracted, even if it is in cash, even if it is in journal entry also, so in partnership firm, 269SS, 269T not attracted. So it's a very, very interesting thing when it happens between firm and the partner. Many people not aware of this. This is a very, very good provision where they go into little bit of intricacies of the law itself, partnership act itself. They are going into, not restricting to the income tax act. Okay, this is a very interesting case. So one person in one case, what happened is the assessee, he levied, rather the income tax department levied a penalty under 271D. They levied a penalty on 271D for a violation, saying that you have made a transaction in excess of the specified limit. So penalty levied. Now the assessee, he challenged that penalty and it is pending before the appellate authorities. While this is the case, a 263 order was passed by the principal commissioner or the commissioner in charge, administrative commissioner, where he said that based on the information that there is a cash transaction like this, when they levied the 271D, it came to our light that such a transaction has taken place. Based on that, we are doing a revision. We are revising the order because there are multiple cash transactions of this nature which have got covered, which we should have disallowed. Or we should have verified further, which we have not done. So 263 order passed, a direction given to the assessing officer. Now subsequently, after this 263 order is passed, it has gone to the assessing officer. He is doing the giving effect assessment proceedings. While this is the case, during this course of the time, the other original case where they challenged the penalty under 271D, they went all the way to the tribunal. Tribunal held in their favor, saying that yes, you are right, 271D is not applicable. In such a scenario, you should not levy the penalty under 271D. So we strike down the 271D order. Then the question came up, when the 271D, that itself is gone, is the 263 revision valid? Naturally, department said, sir, of course it is valid. See, in the course of this revision only, we came to know that he has incurred so much expenses, etc., which is not able to justify the source. He is not able to explain the expenditure. So where is the question whether it is justified or not? I can prove it that it is justified by the additions I am making. But then it again went to the tribunal, and the tribunal in Lucknow ITAT, they held where the basis for the revision, why you did the revision, 271D order passed. When the basis of the revision is the 271D order, and the 271D order itself held bad in law, naturally the 263 also is bad in law because it does not have any legs to stand on. If suppose instead of relying on that 271D order, suppose instead of that, you simply said that cash transaction has taken place which has not been verified, then such a scenario, we would have said that it is valid. But your revision is based on that 271D order. That 271D order itself is gone. So where is the question of your 263 surviving? It has no legs to stand on. So 263 dismissed, giving effect to 263 also dismissed. So assessee went scot free. No 271D, no 263, no 263 giving effect also. So nothing he had, he did not suffer any consequences in such a scenario. It's a very, very interesting case of where a 263 order struck down because of the original penalty being struck down. The X takes a loan from Y. X takes a loan from Y for rupees 18,000 in check. He takes an additional loan of rupees 3,000 in cash. Is 269 SS triggered? We already covered this. The answer is overwhelming yes. There's no doubt about it because as I told you, the second clause of 269 SS talks about the amount remaining unpaid. So the amount remaining unpaid at that time or amount receivable at that time is 21,000, which is in excess of 20,000. So naturally, 269 SS is triggered and it is very much attracted. Not enough to show the transaction is genuine and bona fide, but it must satisfy the reasonable test. The very, very important point, because 273B, if you look at 273B, it talks about the the exception to 269 SS, where it says the transaction must be reasonable. There must be a reasonable and just and sufficient cause why you incurred this transaction in violation of 269 SS. Now this assessee took great efforts. He justified it. He said, see, this is the reason, this is the explanation, everything he gave. And therefore they said it is bona fide. It was once again held. It does not matter how much bona fide it is, how genuine, what proof, documents and all you have. If you don't have a reasonable reason why you violated the provision, then in that case 269 SS will be attracted. It will be attracted. In fact, I'll tell you a very interesting scenario that I saw with my own eyes. I saw it with my own eyes. It was a very leading hospital in Chennai where I had gone there and I was walking through the billing area. I was walking through the billing area and there was some shouting and all happening. People were shouting and a lot of crying and all that happening. I was wondering why. So when I listened, what I found interesting is that there was a patient and rather patient's attender and their patient was to undergo a very important life determining surgery. He has only cash and he wants to make the payment because the hospital said unless you make the payment you will not start the procedure, so you have to make the payment. So this person has gone to make the payment and the hospital refused to accept cash in excess of 1,99,000. They said we cannot accept 1 rupee more. He said, sir, this is my wife's life and death situation. I don't have bank account. Where I will go open bank account here? I am from Northeast. Where I will open bank account, how I will deposit, etc. They said, we don't care. We will give you account details. You go do it now. You come and give me the proof that you made the payment. And I will not accept the cash from you in this counter. Across the counter, I will not do it. You do GPay, net banking, whatever you pay. So many people are there. You pay 1%, you ensure that they transfer, etc. But we will not accept it in cash. Now here is a prime scenario where 269 ST would have been attracted, but it would have been a justifiable cause in my view because it's somebody's life-changing life and death reason. He can always justify it. But the hospital took a call in this scenario not to accept at all. So even if it's a bona fide reason, there must be a justifiable and sufficient reasonable test why the transaction or why the violation happened. If you don't have a reasonable reason, how much ever you can prove that's genuine, bona fide, offered to tax, everything, it does not matter. It has to satisfy the just and reasonable test. This is a summary of the 269 yeses, whatever we discussed. I just summarized it. Next is a 269T, which is almost identical. It's almost identical to 269 yeses, but there are only 2 or 3 points which I want to talk about. I'll talk about it through this case. Mr. X advances a loan to Mr. Y in cash for rupees 60,000. First is 269 yeses applicable. Can you put the answer in the chat box? In such a scenario, Mr. X advances a loan of rupees 60,000 to Mr. Y. Is 269 yeses applicable to Mr. Y? The answer is a overwhelming yes, yes, yes. Yes, yes, yes. So everyone has said yes.
No, sir.
No.
No, sir.
Someone just no. Why it is not applicable, ma'am?
For the recipient only. 2 plus 2. For
I
X
am
only it
asking
is
for
applicable.
no, no. Mr. X is advanced to Y. I am asking whether 269 yes is applicable for Y because he has received the loan. No. So the recipient has received the loan. So 269. Somebody has put in the chat box saying, "Can you explain, sir?" This is after Ramayana asking who is Ramar. The entire 269 yeses we covered now. So it's 269 yeses definitely it is applicable because it violates the limits. It is beyond the 20,000 limit. So therefore 269 yeses applicable for Mr. Y. But is 269 T applicable for Mr. X? Madam, now you can answer whether 269T is applicable for Mr. X in such a scenario. Is it applicable? Yes, applicable, or no, not applicable? Yes, yes, yes. Some people saying no. Yes, 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 applicable. I saw Mr. Raj Advani, the only person in a sea of yeses to say no. Sir, why you have said no? Everyone saying yes. Okay, now only 2, 3 no's. I think after seeing Mr. Raj Advani, they have got confident and they have started saying no. Now here, I also agree with Mr. Advani and the others who have said, who are saying no. The reason is very, very simple. If you read the section 269P, it says, and I am repeating, no branch or banking company or no other company or cooperative society, no firm or person shall repay. The word here is repay. The word is not pay, the word is repay. So no person shall repay any loan or deposit made with a specified advance otherwise than by account to payee check. That means automatically, the meaning means a loan should have been existing already. If it did not exist, there's no question of repayment. There's no question of repayment unless a loan automatically existed on that date. So here in our example, it's the first time that Mr. X is advancing a loan to Mr. Y. It's not a repayment. It's not a repayment. He is advancing a loan. He is advancing a loan to Mr. Y, or Mr. Y is advancing a loan, whatever you want to call it. Is it a repayment? It is not a repayment. It is not a repayment. So therefore, it is very, very clear. It's very, very clear that a repayment means there should have been loan existing. So 269T applicable only on repayment. A fresh loan, a fresh advance given or a fresh advance taken will not be covered, will not be covered by 269T. It is only for existing loan repayment. So drawn in the name of the person who has made a loan or deposit. Now this is the next important point. Everything is almost identical to 269 ESS except for 2, 3 things. If you see over here, drawn in the name of the person who has made the loan or deposit. The loan or deposit should have been made by account pay check or electronic mode, blah, 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 drawn in the name of the person who has made a loan or deposit. Let us take a scenario. Let's take a scenario. I have, or rather I have decided to repay a loan which was given to me by Mr. X. Mr. X has given the loan to me. I decide to repay him. Mr. X says, see, my account is, and some banking issues are there. My account has been hacked. So you don't give it to me. What you do, you give it to my son. You give it in the name of my son. So I'll adjust it. So I say, okay, fine. Mr. X told me to give it to his son. So I transfer it to the name of the son. I transfer it to the name of the son. And I say, okay, check payment made. They are adjusting internally between themselves. Is it a violation of 2690? Yes, it is absolutely a violation because the repayment is there. Repayment is through banking channels only, but it is not repaid in the name of the person who made the loan or deposit. The person who made the loan or deposit in this scenario is Mr. X, but I have repaid somebody else. It may be his son, it may be his wife, it may be his employee. Ultimately, the net effect is the same only, sir. But it is not in the name of the person who gave the loan or deposit. So it can attract a issue. It can attract the issue. So what we call it becomes a journal entry transaction in such a scenario, because between the son and the father, it is a journal entry transaction of adjustment that I am getting the benefit of. So that can also trigger the 269T violation. So these are the only two critical points where it is very different from 269SS. Otherwise, 269T and 269SS almost identical, because one is from the recipient point of view, the other is from the repayer point of view. It's from the repayer point of view. So don't use the word payer, use the word repayer, because it says repayment. So this is a very, very critical distinction. People tend to miss it. So it's a repayment. It is not a fresh advance. So these are all just summaries. And let me take some more case laws. Because in Sri Ambika Flour Mills, it's a Gujarat very, very famous case where it was held by the High Court, where transactions between sister concerns, where parent company, holding company, then they have 50% shareholding, etc. In such a case, transactions between them, they are not covered by the provisions of 269SS and 269T. Do I agree with this? I 100% do not agree with this decision. I don't know how they come to this conclusion, why it came to this, because the provisions, especially they are meant for such scenarios only, where people they do between adjustment between sister concerns, etc. In fact, if you see this, Ambika Flour Mills Corporation, so it is not a company. So you can make that decision very confidently saying there's a common partner and all that. But if it's a company, or the very fact that they are two separate entities is very, very important, that they have to consider that it is not covered by the exceptions. Otherwise, it will be used as a tool to avoid paying this 269 SST provisions. It will become a tool to tax planning. So even though this provision is there in favor of the assessee, I don't necessarily agree with this one. During search of X, notes were found, paper notes were found, saying Y has paid amount of rupees 60,000, or rather he has repaid amount of rupees 60,000 in cash. Can penalty under section 271E be made on Mr. Y? Look at this interesting case. Search was conducted in the premises of X. They found some written paper notes. This is a real scenario. They found written paper notes saying Mr. Y has repaid rupees 60,000 in cash. Straight away, without doing any assessment, because assessment they could not make any addition, they levied a penalty under 271E saying Mr. Y has repaid Mr. X in excess of 20,000. Is it valid? It is not valid, because 271D, the initial onus falls in the hands of Mr. Rasa, rather the income tax department. They have to show that a transaction was there which was in violation of 269SS or 269T. If they are not able to do that, then there's no question of the onus shifting to the assessee to establish there's a just and reasonable cause, or there is no violation at all. So if there is no 20, I cannot say I found a search, I found a paper, okay, that is there, so therefore I will levy the penalty. No, you must be able to justify it, because assessee can use an alternative claim in the assessment. We will take a scenario, the same scenario. Note has found that Y has paid 60,000. So department come and ask why. You have paid 60,000 in cash. How you paid? Sir, I have cash. Sir, look at the cash balance I have in hand. I have not paid, but suppose you say I have paid also. I have cash book balance. Using that only I have paid, sir. So now what department doing? Oh, okay, that's justified. So no quantum, no addition made. But it's a violation of 271. He will levy the penalty. No, you cannot levy penalty simply saying that it's a violation. You have to justify and prove that there is a violation. My submission, I have a cash balance, is an alternative submission. I am saying I did not take the transaction did not take place, but me saying 60,000 anyway I have the source is a justification for the course of the assessment. When it comes to penalty under 271D or 271E, etc., the department is duty bound. The department duty bound to act with a valid reason as to why there is a violation, and they must prove it. None of the persons have transacting had a bank account at the time when they made the cash deposits in cash with the assessee. Moreover, assessee is not aware of the provisions of 269 ST or T. Will 271D, 271E be justified? We all know there is a very famous, anyone who has studied law or is familiar with the legal provisions knows that there is one very, very famous maxim called ignorance of law is not excusable. It is ignorance law now is non-excusat. There's a very Latin phrase which says that ignorance of law is not an excuse. You can never say, I didn't know the law, sir. That time I didn't know. Now it has changed. Or how I'm supposed to know, sir? I am not a chartered accountant. I am not a finance person. How I'll know 269 SST and all? So multiple decisions are there which said that ignorance of law is not an excuse. You should have known. Moment you do business, you should know the law. Moment you are filing, you become an income tax assessee, you should know income tax. So ignorance of law is not excuse, but despite that, they have held in this case that he did not know, they did not have a bank account also. So therefore, it's considered to be a valid reason. So you cannot hold him to be accountable in such a scenario. So it's a very, very interesting decision which flies against the ignorance of law thing which you have studied as a lawyer so many times. So even though you ignore the law, even though you did not know the law, it's considered to be okay in this scenario. So if you remember the earlier case, we saw Ambika Flour Mills, where I told you I disagree with it, etc. The reason I disagree is there's another decision called Canara Housing Development Corporation. In the same case, similar facts rather, the assessee firm repaid loan amount in cash to another firm in violation of the provisions of section 269P. He said, sir, it's a violation because sister concern. I'm a partner in X firm also. I'm a partner in Y firm also. So therefore, it's an inter-firm transaction and penalty order is not leviable because sister concerned. We already got a decision. Ambika Flour Mills, Gujarat High Court is there. Here it was held in CIT versus Canara Housing, saying that it does not matter whether sister concerned, brother concerned, father concerned and all. If you are violating the provisions, whether you have a common form partner or all, we do not care. It's a violation. You don't have a justifiable reasonable cause, so therefore the penalty will be levied. So that is how it was done in CIT Canara. I agree with this decision, even though Gujarat decision in Ambika Flour Mills in favor of the assessee, I do not agree with it. I agree with CIT versus Canara because it can be used as a huge tax planning tool otherwise, or a device to completely avoid tax. The entire purpose of the provision will be lost if we give such a decision in favor of the person who is doing this violation. So I agree with CIT versus Canara Housing. Levy of penalty under 271D, 271E limitation period will be counted from the day of the assessment. This is more of a limitation period, so I'm not spending time on that. The assessee had received cash from father of one Mr. G, and he said it has to be paid to G to meet his educational expenses. So he has received the cash from the father of one person who's studying abroad, and that person said you have to pay it to him for his expenses. So it was considered by the AO, it's a violation of 269 SS because you have given a loan. Here it was held by the ITAT in Jodhpur, where they said it is a nature of trust money. It is given as a trust fund. It is not given as a money which is a loan. So therefore, there's no contravention. There's no contravention. So it is a trust amount. It's like a contract of bailment like that. So therefore, you should not. It's not considered a violation of 269 ST because it is not meant as a loan. So therefore, it is held in favor of the assessee. This is very interesting because where just a reasonable reason comes up, you can never use the same reason in same two cases. Every case is different, and this is where the discretion of the assessing officer comes in, where they have to see whether they determine to be a reasonable cause or not. There are going to be multiple cases where similar facts are there, but one person holds it to be a violation, another person holds it to be no violation. Both can be correct. Both can be absolutely correct. It has to be checked the facts and circumstances of each case. So here is a case where a person has clearly advanced money. It is clearly in the form of cash. It is clearly violating the provisions of 269 SS, but still the courts have held that it is in the nature of a trust transaction. It is like a contract of bailment. It is not in the contract of a loan. So therefore, there's no question of 269 SS or T arising. Finally, we come to 269 ST. We come to 269 ST, which in my view has been a great transaction, or rather a great provision in restricting the cash transactions which are taken place. 269 ST is a absolutely imperative solution in reducing the cash transactions today, because what it says is no person shall receive in cash any amount of rupees 2 lakhs or more in aggregate from a person either in a day or in a single transaction or in relation to connecting events or occasion or a transaction. Now, where the vagueness comes in my view, is only the last provision. These two are very clear. Where I'm getting in aggregate from a person in a day, one person gives me 10,000, 10,000, 10,000, 10,000. In a day, it crosses rupees 2 lakh rupees. Then it's connected. It's very clear that I've got in aggregate more than from one person in a day. It's more than 2 lakhs, so it's applicable. Or in a single transaction, I'm making one sale for 10 lakh rupees, 269 ST attracted. The problem arises in respect of transaction relating to one event or occasion or a connected transactions. Now, this one occasion or one event is very, very vague. It is not defined anywhere. Let us take a scenario. I told you that it's in an occasion of wedding. In occasion of wedding, a person receives cash gift. Now, at the end of the wedding, when he goes home, he finds that he has received more than 10 lakh rupees in cash. Now, is it a violation of 269 ST? We may say no. It has come from multiple people. It's occasion of wedding and all. But as I told you, no such exemption is there. No wedding exemption, no gift exemption is there in case of 269 SS, 269T, and 269 ST. So we have to go to the provision. 269 ST, what does it say? Is it in aggregate from a single person? I don't think so. It's not from a single person. It does not look like it is a single person. Is it in a day? Yes, it is in a single day. It's a or provision. Is it a single transaction? Definitely not. So this also most likely no, this also no. Is it in respect of a single event or a occasion? The answer is a overwhelming yes over here. The answer is a overwhelming yes, that it is from a single event or a single occasion. But we can all agree that this is not the purpose of 269 ST. It was not done to trap occasions like this. A person who has a wedding is bound to have cash receipts, and 2 lakhs is a small receipt when it's a big wedding. In a big wedding, likely if you get even 100 rupees from each person, 101, that's what generally they'll give. One rupee coin will also be there. It's 101 rupees. If you get 2000 guests, if you get 3000 guests, automatically the limit will automatically cross it. It will cross that limit easily. So the purpose of this is not to trap such a occasion. It is meant to trap people who are avoiding it by breaking transactions. If you saw 40A3, we discussed this. The reason I touched 40A3 very early on is this reason. In 40A3, if you see, it says any payment made to a single person in a single day, there's no question of connected transaction and all in 40A3. So one same party, I am paying him. I am saying today I'll give you 9,999. Tomorrow you come 9,999. Like that for 10 days I give him 9,999. So if you see overall, it easily crosses the limit. But I will not aggregate into multiple days. Everything is a single day transaction. It's a single day transaction only. They will not see across multiple days. So in such a scenario, it is very, very clear to me. It's very, very clear to me that 40A3 does not violate it, but 269 ST, the one event or one occasion, it may violate it because it's connected to the same transaction or series of transactions or one event or one occasion. So the purpose of 269 ST is to trap people who are trying to violate the provisions. But there is a huge risk in the way it is worded because of the vagueness of this last line. There's no proper definition anywhere. There's no proper definition anywhere. In fact, before the session also, I was frantically searching to see where are the decisions. But because this is such a new section, it has just come out 3 or 4 years back. Subsequently, COVID happened, so assessments got delayed, appeals got delayed, faceless came. Till date, so many orders we have not got any CIT appeals order. So as it stands, the provision or rather resolution for 269 ST additions made, we have still not got at the appellate level. At the appellate level, anywhere across India, the cases have not yet come up. Two cases came up, both cases went for settlement commission. So therefore, currently on the substantive matter of 269 ST, there are not enough case laws for me to discuss saying what is this vagueness, whether it is valid or not, whether one event, one occasion, series of transactions, how to define it, how does it arise. There is enough lack of clarity. I mean, there's not enough clarity over here. There's too much of a lack of clarity. There are not enough decisions also there by the appellate authorities. But the only thing which is clear over here, in the specific exemptions, government company, banking company, if 269 SS is applicable, 269 ST not applicable. So loans, etc., automatically don't get covered under this. Any receipts by the government or persons notified by the government, or where any good and sufficient reason is there for contravention, it will be considered. So there 273B covers the good and sufficient reason for 269 SS and 269 T. But 273B, if you see 269 ST is not there, the reason is because it is inbuilt into the 269 ST section itself. It comes in that exceptions itself. So is it applicable even for exempt transactions? If I get a gift from my father, is 269 ST applicable? Yes. If it is more than rupees 2 lakh rupees in cash, it is definitely applicable. So only business or personal reasons also? Yes, personal reasons also covered. Is maximum cash limit allowed? Is it 1,99,000? Yes, 1,99,999. If it is 2 lakhs and above, 269 ST is triggered. So what if customer deposits cash into my account directly? I don't have any control over it. Is 269 ST applicable? Yes, it is applicable, but it may be a just and sufficient reason. It may be a just and sufficient reason. So you will have to, most likely it will go to the court. A lot of cases are there on this similar issue right now. Capital introduced by the partner, is it covered by 269 ST? Yes, it is covered, but in my view, 269 SS says very, very clearly, multiple decisions are there where they say partner and firm, you cannot separate it, they're all the same. So if that is the case, then 269 SS has already given exemption. That means 269 ST also will likely give that exemption when it goes to the courts, when it goes to the tribunals, etc. Hospital bill paid in cash, I already gave you a practical scenario, 269 ST very much covered. So with this, I pretty much covered 269 SS, 269T and certain other cash transactions. I had multiple other case laws for demonetization also because it is relating to cash, but it's already 12:40. So I don't want to, for want of time, I don't want to, discuss that case laws. But thank you very much for a very patient listening. And if there are any questions, I'll be happy to take it. And anyone who wants the PPT, you may just drop me a message. Here's my mobile and WhatsApp number. Please send me a WhatsApp message. I will save your contact also. I will send the PPT and I will also share the latest updates, case laws, various other presentations that is being done. I will be happy to share it with you. So thank you very much for a very patient listening. Organizers, should I take questions now?
Yes.
Yes,
If someone is interested in asking questions, if you have any doubts, please do so now. Please make use of this time. We have another 20 minutes, so you can make use of this time to ask questions and get it clarified. Thank you.
I think few questions have come in the chat box. I'll start taking that one by one. And as and when anyone wants to unmute and ask, they can ask. So what is the consequence in case of Mr. X has paid Mr. Y 6 lakhs in cash towards purchase of immovable property in the hands of the buyer, Mr. X? Is there any applicability? Applicability, no violation of 269 SS, no violation of 269T, no violation of 269 ST. So as long as the recipient, as long as the person who is paying has properly disclosed it in his books of accounts, he has the proper sources for explanation, there is no violation by him. He need not worry at all, sir. Yes, sir. Next question. Anybody or somebody wanted to unmute? I saw the hand was raised. Sir, anyone wants to unmute and ask?
Sir, good morning, sir.
Yes, good morning, ma'am.
Amount is 20, more than 20,000, and then amount is paid in this year as a 5,000 in cash. Then which year we have to levy penalty? Repayable is balance is pending.
Yes.
But this which year we have to levy penalties?
The penalty is the date of the transaction, the date the violation takes place. That is the relevant date for us. So whenever that transaction or that violation happens, that is the date that assessment year is applicable for you.
Yes, sir. Thank you.
Thank you.
Good afternoon, sir.
Good afternoon.
It's not a query, just but I would like to make an observation with regard to this 273B.
Sir.
Most of the times the tribunals or the court have actually considered the failure itself as reasonable. That's why they are carrying out an exception in the statute rather than examining the reasonable cause for the said failure. More of the jurisprudence is like that. The failure itself is treated as reasonable than examining the reasonable cause. So 273 in most instances in this penalty provisions, I observed that it is applied in mostly in a wrong way. In one of the case laws, this is a different scenario with regard to the ignorance is not an excuse. I think in that case law, it is never considered as a sole reason. With coupled with those people not having the bank account, cumulatively it is considered as a factor to strengthen that. That is an exception.
Yes. No, absolutely, I 100% agree. And in fact, that ignorance of law is very, very funny thing. I remember my senior, I also studied my law. I was under a high court judge now, madam, who was an expert in tax law. So I asked this question, you're asking, she said, you explained saying before madam became a judge, of course. She said, before, you put that you did not know the law. I said, how we can say that? We cannot say ignorance of law. He said, there's no concept of ignorance of law. The fact is, if that is not an excuse, then there's no concept of appeal itself. People go on appeal because some person, either one judge, maybe High Court judge or sometimes Supreme Court judge also, they overrule a judgment because that means the assumption is the other judge did not know the law. So this ignorance of law concept is not as black and white as how the law intended. It has to be certain gray. So you have to apply it with certain nuance to it. So that's how they, as you rightly said, they not simply see that ignorance of law, they'll have to see a little bit more of the facts. Yes, sir.
Yes, sir. Thank you.
Thank you, sir.
Good afternoon, sir.
Good afternoon, sir.
Sir, is the amount paid received on holidays is exempt, sir?
Amount received on?
Holidays, repayment, banking holidays.
Can you give an example, sir?
Banking holidays, sir, Sunday, like that, or second Sunday and fourth Sunday.
Okay. No, actually, it was sorry, now I understand the question. Basically, what happened is there used to be an exemption carved out for holidays, there Sundays, national holidays, etc. But it has been removed. It has been removed. I think 2 years back or 3 years back, that exception has now been removed. The reason is the government have taken a stand very strongly that you can always make net banking payment, GPay payment, or various methods are there. So there's no need for you. I'll tell you a recent case which we handled. Before this PF issue got settled very recently by the Supreme Court, before that settlement, there was the issue always that whether the date of payment, what is the date we must take? Is it the exact last date? Is 15th the cutoff date for payment of PF or if it can it be added one more day if it is a holiday? If 15th falls, for example, August 15th is an Independence Day. So it's the last day for payment of PF but it's a holiday. So does that mean the date becomes 16th? So we took that stand because in our assessee's case, one appeal that I was handling, it was genuinely where 15th he did not pay, he has paid on 16th. So we said PF there's no delay, it's a valid payment because it's a holiday. But the various courts have held almost unanimously now there are enough decisions to say that the question of holidays is an old concept. It's more than 20, 30 years old. Today that the concept of Sundays, holidays, etc. does not exist. You have enough methodologies to make the payment, so we will not give the extension. But having said that, it may go to the courts because tribunals and high court, etc., take a more reasonable stance. So they may decide saying that there's a just and sufficient reason. He could not come because Saturday also holiday. Friday he was not well. So because of that, it can be held as a reasonable cause. But that is not for the assessing officer to decide. If the assessing officer has to do, if he feels it is reasonable, he can decide. But suppose he feels he wants to levy the penalty, it's perfectly fine to levy the penalty in such a scenario.
Thank you, sir. Thank you.
Thank you, sir.
Some more questions in the chat box, Mr. Abhishek.
Okay. Let me see.
Please.
Let me open it. Sir, please send the presentation. Sure, sir, I will send it. Please send me a message in WhatsApp. I'll be happy to send it, sir. Just drop a name with the message with your name. I'll be happy to share it, sir. Many people have sent their email IDs. I just, because once we close the program, the email IDs will disappear for me. So I request you to, share it to my mobile number or WhatsApp message, or you can send me an email also. I'll be happy to share it with you. A farmer received cash of more than rupees 2 lakh rupees from a rice mill. Will 269 ST be applicable to the farmer? Can rice mill pay the cash to the farmer for more than 2 lakhs? So here two aspects are there. One is from the farmer point of view. In my view, farmer is an agriculturist, so therefore receiving cash payment will be covered by the exemptions. He can be considered as someone who is receiving just and sufficient reason, plus he's an agriculturist, received for agricultural reasons. The law in general, this cash provisions, wherever the cash laws are there, exemptions are given for genuine agriculturists. So where is a farmer, then it will be considered as an exemption. The rice mill making the payment, once again, since the payment is made to a farmer, even under 40A3, because it's a rice mill, the payment will be a normal business expense for them. 40A3 also carves out an exception for a farmer. But I'll tell you where the tricky part comes in. Sometimes the rice mill will receive payment for a rice item. So maybe he is cleaning the rice, maybe he is making the rice neat and they're bagging it and they're dealing it. Will the rice mill also get to enjoy this exemption? The answer is no, because they are not a farmer. They are engaged in dealing agricultural products or agricultural produce, but they are not agriculturist. So these exemptions or these sort of exceptions made in the law is made specifically for agriculturists and not for people dealing in agricultural products. So that is a very keen distinction we have to have. If it is received by the farmer, no problem at all. But if it is received by a person dealing in the products, you have to understand what is the nature of them. Is there any loan given, deposit accepted in cash form by members of a cooperative society? So cooperative society, I did not cover it today because they have just recently, they have exceeded the limits. They have increased it up to 2 lakhs. So 269 SS and 269T in the latest budget, you may have seen for cooperatives alone, they have increased the limit from 20,000 up to 2 lakh rupees. It's a new, decision. So there are not much nuance in it, except that the limit has been increased. That's all. Only if it goes to the court, we'll understand more specifics. And generally the law, if you see such a clarification or such an amendment, beneficial amendment that comes because of a practical difficulty, usually has a retrospective effect amendment. So by doing this, increasing 2 lakhs, because they said it's a practical difficulty, so many people difficult, and I seen it, a case I've handled also, these milk cooperatives, etc. Very often cash transactions, the farmers or dairy dealers and all they deal with. So in such a scenario, co-op also naturally has huge cash deposits, cash payments. It was held in many cases that it's a reasonable cost. So wherever it's increased to 2 lakhs limit, it has come in law. Normally the courts allow it to be taken with a retrospective effect because the purpose of introduction is a practical difficulty. Just like how the safe harbor limit for capital gains, it was there for 5%. Subsequently, it was increased to 10%. Majority of the courts have held the view that even though in the old year it was still 5% only, you can take up to 10% difference. It is considered to be acceptable. Many courts have held. So these sort of provisions, which are beneficial provisions due to practical difficulties, generally are given a retrospective effect. So if a person gives a loan in cash and gives the money in cash for purchase of immovable property, no punishment by way of penalty. If it contravenes the provisions of 269 SS or 269T, then it is there. And purchase of immovable property, in my view today, very rarely you are going to get immovable property less than 2 lakh rupees. So if you purchase that, whoever receives it, the person who receives the money for sale of the property, for him 269 ST will be applicable. But from the buyer point of view, it is not applicable. You just have to justify the source, then you are good enough to do. Yes, good evening.
Sir, you're muted, sir. Please unmute. Mukundan, sir. He wants to ask some question.
Okay. For once again, I thought I was muted. I spent so much time answering. Yes, sir.
No, sir, we are not able to hear you, Mukundan, sir.
Mukundan, sir, we cannot hear you. Maybe you can just put the question in chat box if there's difficulty.
Yeah.
We got a question from Sanjay. Sir, what is the difference between a farmer and agriculturist? The reason I say agriculturist is farmer may be engaged in specifically certain farming activities. Agriculturist does connected work also. A person who is doing not necessarily at the farm, but doing a connected work which is related to the farming produce will also be considered an agriculturist. Let us say a bullock cart driver. He is considered an agriculturist. He is not necessarily a farmer, but he is also agriculturist. Or there may be people who are in dairy farming, who are in fish farming, poultry farming, etc. These are all also agriculturists. They are not the traditional definition of farmer. That is why I said agriculturist and not a farmer. These are also covered under the exceptions. Yes, Mukundan sir, were you able to fix it? Yeah, no, sir, you're still not audible, sir, unfortunately. Let's see if, let me see if I can unmute you if possible. On the NCR 10, it is there. Your audio is on, but we cannot hear you, sir. Actually, your mic is on, but we are not able to hear. Any other questions are there?
Sir, please try now, sir. 1 minute.
Sir, it is still not audible.
Please try now, because I tried to disable and enable again. Some others also can try in case whether only sir is having an issue or others are also.
No, sir, it's not audible, unfortunately.
Yeah. Okay. Sir, can you join in mobile and try, sir?
There are some more questions. Maybe I'll just
please,
take
sir,
that.
please try in mobile. You can join in mobile and try. Because sometimes
so if a
the
person
desktop
is
will have an
involved
issue.
in business of raising prawns and selling it to firms which are exporting them, receives cash in excess of rupees 2 lakh, the nature of the business has to be seen, sir, because the business of raising prawns generally has become very commercial today. Is not a traditional farming activity as generally we see it. So what is the nature of business? What is his turnover? What is the sort of setup he's having, business setup? How many employees? Is there any plant and machinery? All these aspects will be examined, and based on that, a decision can be taken whether he's a farmer or not. It is not a very simple thing because he is dealing in agricultural products. That's why I told you have to see. And the moment he satisfies that definition, then you can take the exception. Sir, if the person is doing captive farming in a closed arena, can this apply to exceptions? Again, in my view, because Sanjay sir, I'll give you an example of a case that I saw. It's a case of what they call hydroponics. Hydroponics is where they grow, agricultural products, fruits and vegetables in a controlled scenario where they have a closed atmosphere. It's like a building, a huge infrastructure, etc., huge cost, sprinkler system, water system, then sunlight, artificial sunlight, and various other atmospheres, etc., setup. Everything is done with a very carefully, crafted expenditure. And finally, when they do all that, it bears fruits. So whether this person is a farmer, just like the same person who's doing all the digging, plowing, etc., are they both the same? In my view, no. They are both dealing in agricultural products, but one person is a businessman while the other person is a farmer. In my view, exceptions will not apply to that hydroponics person. It will definitely apply to the farmer. That's how I see it personally. But once again, the law does not give very clarity on this issue. So it has to be decided on a case-to-case basis.
Yeah, Mukundan, sir. Yeah.
Yes, sir. Yes, sir. You're audible now, sir.
Yeah. First of all, thanks for an excellent lecture on this topic. It's a very important topic for all of us in the range heads. I am Mukundan, range head here in non-corporate range. And I also thank NADT RC Chennai for putting forth this wonderful program. which they keep doing every month through the CEP. And my question is, see, there is one Chennai Tribunal decision of 2022, Noordin Ahmed Amina, on this issue of 270D penalty, where they keep allowing delete the penalty on the ground that whenever there is a transaction in immovable property by way of cash and assessor is reported the transaction is returned, they say now it's provisions introduced only to curb the Black Money Act, the black money and all that is already reported, and also proportion of cash receipt is only less. In this case, for example, 50 lakhs for the transaction amount, 2 lakhs received through cash and 48 lakhs received by way of banking channels. But they quote this, they allowed this on the only ground that you look at the proportion like that. And now this decision is being followed by many CET appeals whenever it comes to 271D penalty. Do we have any counter for that? Since it is a jurisdictional tribunal decision, just wanted to check out.
Yeah, unfortunately, as you rightly said, since being a jurisdictional decision, it becomes binding, even if it is not necessarily in the spirit of the law. In my view, you see the spirit of the law, it was brought to curb black money transactions, but it has evolved because the provision has not changed. So still the applicability arises. So whether it is 2 lakh rupees or whether it is 21,000 rupees, there's no differential. If it satisfies the definition under 269 SS, it should therefore 100% be captured is my personal view. But having said that, as I started off my session, if you remember, I started off saying so many 26 AS provisions, TDS provisions, AIS, TIS. Today, there are enough mechanisms to capture the cash transactions. There is no necessity to penalize because catching the transaction has become much easier today. So I personally feel the life of this 271D and 271DA and 271E may not be that long. Maybe in the next few years, if the government are serious about easing the penal provisions, we may see these provisions being waived off or at least diluted a little bit. Maybe from 100% it may be made 50%, etc. But I see that today we are in a scenario where tracking the transactions at the source itself has become much more rewarding from the department side and revenue side also. It has become much more easier to do it at the source rather than after the fact. So this 271D, 271E is usually used as a after the fact. It has happened. Maybe you have not reported, so you are being penalized. To penalize a person for taking a transaction which has been explained may not be as fair as what the tribunals and courts are looking at. And that's what the case that you quoted also, Noordin Ahmed, that is what the logic is. But to answer your question plainly, it is not as per law. Law is very clear that if it's a violation, penalty has to be levied. That's it. But whether it is in the interest of justice, maybe that is each person to decide. And I personally feel maybe in the next few years, these provisions may slowly start being ordered.
Okay. There is one more thing on the limitation. I think you skipped over that particular case law. Normally, we think that the time limit starts from me. I'm a ranger. Time limit starts from me from the time I issue the notice. Within the 6 months, I have to levy the penalty. But in your case law, it was mentioned that when the reference is coming from the AO to the range head, the time limit starts from that day itself. Absolutely. So suppose the reference comes today and I issue the notice after 1 month. Is it that I lose 1 month of my time limit allowed based on that?
Yes, absolutely. Absolutely, sir.
Okay.
I think there are multiple decisions. I only put one decision there. But the general view of the courts is that the time starts ticking from the date the reference is made.
Okay, thank you so much.
Thank you, sir.
I
think it's covered. Yes, sir.
Yeah, since it's 1 o'clock, I think we can wind up, Mr. Abhishek.
So thank you very much for very patient
in
listening.
case
Thank you so much. Yes, sir.
Yeah, if officers have some questions,
yes,
you can always WhatsApp to Mr. Abhishek, or you may send your queries to us. We'll get it answered and we'll reply to you. Okay, and the PPTs also will be shared in different WhatsApp groups also once I receive it from Mr. Abhishek. So I take this opportunity to thank Mr. Abhishek for having given the consent to deliver this lecture in a very, very short notice. Actually, we planned to have it on last Friday. He was busy at CBDT. He had to go to Delhi for a meeting. So we couldn't make it last Friday. Hence, we had postponed to today. And I think it has been an excellent session by Mr. Abhishek. And more than 100 have joined the program and were benefited. And I thank all the participants who have joined and who are encouraging us to explore into new topics month to month under CEP. And we look forward to you joining in the next programs also. We'll be notifying it for the subsequent months also with good topics. You may also suggest some topics, people who are working in the field, in case if we have some relevant topics for the benefit of the field, please send us the message of the topic or the issues that have to be dealt. We'll cover it in the next CEPs also. Okay, with very eminent faculty members, and you may also suggest faculty members also to us. Okay, with regard to topic also, we'll also approach them and get it done. Okay, thanks to one and all. Thanks to Mr. Abhishek once again for the wonderful session. Okay, we look forward to having you at more such occasions in the campus as well as online, virtually. Thank you, Mr. Abhishek.
Thank you, sir.
Okay.
Thank you so much, sir. Thank you. Thank you all.